the stock on our radar is Muthoot Finance. Why do we look at that? Because one, gold prices are at a record high level. Secondly, the company itself has gone ahead and looked at their gold loan assets under management, which has crossed the milestone of 1 trillion rupees. That's 1 lakh crore for perspective. In fact, S&P Global Ratings too expects the company to maintain excellent capital and earnings over the next 12 months. They are the market leaders here. What business is looking like for them? We have George Alexander Muthoot, who's the managing director at Muthoot Finance, joining in now. Thanks a lot for joining in, and congratulations on reaching that milestone of 1 trillion rupees on gold assets under management. It says, gold is glittering and gold financiers glittering even more. But, I just wanted your thoughts on, one, how's business looking in terms of loan disbursements? Secondly, as a percentage of the gold that you own versus the loan that you've given, how has that ratio moved, the loan to value ratio out there? How much headroom do you have because of the increased gold prices? And thirdly, on competition itself, the RBI had stopped a lot of other players from extending gold loans, and now they're back in the market. So in light of that, how's your market share held up?
Thank you and good morning. We are actually very pleased to have crossed the 1 trillion market mark for the gold loan assets under management. It's definitely a feather in the cap for the company as well as for the employees and for all the stakeholders, whether it is the employees, customers, everybody. So we are definitely elated with that. Having said that, you asked about the demand. There is still good demand coming from both the rural as well as the urban markets, because availability of funding, as I was saying earlier, is little restricted because of microfinance is also having some issues. The personal loans, etc., people are, the lending institutions, both banks and financial institutions, are not very forthcoming with that also. So people need funding. And we feel happy that we were able to provide this funding. Now, you asked about the loan to value. The maximum we give is only 75%. But then, since the gold price has been moving up, today, if you look, our lending is only about 60% or 62% because the price has shot up so much. So, if you take the total gold with us and the amount lent against the gold, it's only about 62% or so. So, it's not that there is headroom. If people want, they can come and borrow. Not that everybody will take all the money. They take the money whenever they want it. So if somebody wants more, they can always come and take it. And new customers need not bring much more gold. They need to bring only lesser quantity of gold to get the amount they require. So overall, this sector is looking good. We feel that we are effectively aiding and helping the economic progress also. Because without consumption, without people having purchasing power, the economy cannot move forward. So we feel we are able to provide this funding at this good time. And there is one more feather in our cap. The International Rating Agency has upgraded us from BB to BB plus yesterday. So that's also another feather in the cap for the Muthoot.
Absolutely. And I'm going to come to that in just a second, sir, to talk about how now that you have a better rating, plus liquidity conditions are improving in the market. So what does that mean for your funding costs? I'll come to that in 1 second. But just to complete the point on better business prospects when gold prices rise, I mean, you've been doing this business for decades. So is there some sensitivity analysis? Like you're saying, right now you're at 62% LTV. Your maximum cap is 75%. So if people want to borrow more, they can with the same amount of gold now. Typically in the past, what happens? I mean, do people tend to come forth and increase the size of their loans when gold prices rise? Is there some rough pattern from the past that we can go on with?
More than that, I think every day, every newspaper, there is one article about gold and gold price today. So people having gold with them, they are seeing that their wealth is increasing. So they are seeing the wealth which they had as gold, which was earlier less wealthy, less important, is now becoming very important to them. And please look at it on a very big point of view also. We have always saying that India had 28,000 tons of gold. Don't you feel Indians have become much wealthier in the last 2 years because the price has shot up by 50%? So whole India has become wealthier.
No, absolutely. Sir, notionally, it's a feel-good factor. Notionally feels wonderful, considering we are such big owners of gold, right? But in terms of the realistic AUM growth, I mean, last time when we spoke at the end of February, you told us that AUM growth of 25 to 30% is on a full year basis is what you would look at doing. So, does this surge in gold prices, does it push you closer to, say, the 30% mark in terms of growth for next year?
We already close to 38%, ma'am. So we are almost touching 40% this year. So
40% AUM growth this year?
Yeah, AUM of 40% is almost, we are reaching there. So as of today, when we reach that 1 lakh crore, we have already reached 38%. So
wow.
I think we should do better. We were just conservative in saying that we always...
When you said 25-30%, but you will end FY25 with 40% AUM growth. That's definitely a headline.
That's a glittering headline, but the question is what happens next? Because after a 40% growth this year, what are your targets for FY26, FY27? The rate at which you're growing, I think 2 lakh crore should happen in the next 2.5 years. Is that possible?
Thank you for the good comments. But then, as usual, next year also we will be giving a guidance of 15% only, sir. So we will do better, but our guidance will always be that, and we plan to do definitely better. We hope to do better. Of course,
would you do it at better margins?
22,000 crores to 1 lakh crore. So any percentage is big number today.
On a lighter note, Mr. Muthoot, the guidance is not 15%. It is, quote unquote, better than 15%.
Yeah, thank you. Thank you for reminding me.
Would you be earning better margins on this? Because, you spoke about the upgrade that has come in from a ratings agency. Generally, the expectation is that maybe there would be a couple of rate cuts by the RBI as well. So cost of funds is likely to come down. What does that mean for your margins going forward? What kind of guidance can you give us for this year and the next?
Yeah, we always keep a rate of our net interest margin, maybe 10% or so. If the rate of interest, the cost of borrowing goes up little, we try to absorb it. But if it goes up very high, we pass it on. The same when it is coming down also. If the rate of interest or borrowing cost comes down, we will certainly reduce our yield rate. Because we see this as a long-term business. So customers should feel that when rates are coming down, our rates also come down. Because customers see when the rates go up, we charge higher. So to answer your question, if the borrowing cost comes down considerably, we will certainly reduce our rate. Our margins will always be the same. Our net interest margin is always the same.
But sir, you were at the end of the third quarter, I think you were at about 11.5% margin. Now you're saying net interest margin should be around 10%. That would be quite a decline, right?
The decline. This is also centric. So 1 quarter there will be more. The loans are all very short term. So sometimes it takes a month or 2 months for the rates to catch up. So because these are all short-term loans, so when we do a tweaking in the rate also, it takes 2-3 months to change. So quarter on quarter it will be like that, but yearly 10 plus or minus plus or no, 10 to 11 is what we usually keep.
Okay, 10 to 11% margin on a full year basis. That's what you will guide for going forward in the next year as well. Got that point. Just a word on market share as well, because in between there was a lot of intense competition between banks, particularly in the south, right? They were giving you a tough fight, but you folks have been so well entrenched. So what would Muthoot's market share be now?
See, as far as the NBFCs are concerned, we have the highest market share. But of course, banks have a much better branch network. They have more than 1 lakh of branches with all the banks put together. So they have headroom there. But then as far as NBFC is concerned, our market share is definitely quite good, and we hope to continue there also. But as far as competition is concerned, I don't see it as competition. The market is widening. More and more people are now looking at gold. So the people who earlier were not very comfortable taking a gold loan are now feeling very comfortable because banks are doing it, and this is a very valuable asset today. So I think it is not that the competition, there is room for everybody. As I said, as I've always been saying, there is room for everybody. And we, with about 5,000 plus branches, if you look at our subsidiaries also about 6,000 branches, we have. So we are well placed to to take the opportunity and
Right.
probably grow the business. That is one of the big strengths.
Right. Mr. Muthoot, final question before we let you go. Yeah, we understand that we're celebrating you having reached 1 trillion rupees in gold AUM, but the non-gold portfolio, the MFI portfolio, that's still not out of the woods. How is that part of your business doing in terms of asset quality, and what are your plans to improve upon there?
Yeah, I think our microfinance had a portfolio of about 10,000 plus crores maybe 6 months back. Now they are moderating it. It is about 8,000 to 9,000. It has come down. So rather, they are moderating the growth. So if we see another 2 quarters of the issue, that pressure in the microfinance, but I think after 2 quarters, it will stabilize. And sad to say, too, of course, we are one of the very non-significant player in the microfinance market. We are just a player there. And probably whatever is happening in the microfinance, good or bad, definitely affects us also. But having said that, we in Belstar Finance, a good portion of it is the self-help group. We have that and not the joint liability. So that actually helps better recovery. So our recovery is a tad better than the market. But again, if the market is down, they are also down. But definitely better than the average company.
And you're saying the worst is over for Belstar.
Yeah. Thank you.
Okay, all right. So we'll leave it on that note. Thank you very much for joining in.
We have a
Great chat
celebration in
as always.
Bombay. We have a celebration in Bombay for the 1 lakh crore.
Oh, you have a celebration in Bombay. Okay, well, congratulations.
And
And
have it with CNBC.
okay, thank you so much.
Looking forward. Thank you.
Thank you very much.